Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 15th of January, 2023. And we are, in this video, looking at what happened to gold and silver prices last week, including equities, oils, and the value of the US dollar, and where we envisage precious metal prices going this coming week. This is a repeat of yesterday's update video, which was published under the banner that we're showing you on the screen now. In addition, we wish to remind you that tomorrow, at approximately 5 p.m. GMT, we shall be publishing our 2023 gold and silver price forecast. So please look out for that. And one way of ensuring you do not miss it is to subscribe and press the bell sign on this channel. And then you will be notified the minute it appears. Let's now take a look at what's been going on in the precious metals market. Gold rose $54 last week, rising from $1,866 to $1,920, breaking that 1900 level, having hit a high of 1922 and a low of 1866, a rise of 2.9%. In sterling terms, gold finished the week at £1,570, up £26, and in euros it closed at €1,773, that's up 19 euros. Silver rose 43 cents, rising from $23.85 to $24.28. having hit a high of 24.30 and a low of 23.23, a rise of 1.8%. In sterling terms, it closed at £19.84, that's up 12 pence on the week, and in euros it closed at 22.41 euros, that's unchanged for a second week running. The gold to silver ratio rose from 78.2 to 1 to 79 to 1. Now the difference between gold's high and low was $56. And the difference between silver's high and low was $1.07. We predicted last week that we expected to see gold to trade between 1825 and 1900, with an outlier range of 1790 and 1925. With the exception of Friday, gold did trade within the normal range and moved near to the top of our outlier range on Friday, for reasons we'll discuss shortly. For silver, we predicted, quote, silver's normal trading range to rest between $23 and $24.75, and it operated within that range. Other financials, Bitcoin currently stands at $20,814, a significant rise of $3,886 or 23%. And quite a few other cryptocurrencies have vastly outperformed Bitcoin. Is this a re-emergence of the cryptocurrency zealots? Well, we'll wait and see. Equities were also higher last week. Dow Jones closed on Friday at 34,302, up 672 points. The S&P 500 closed at 3,999, up 104. And the Nasdaq Composite closed at 11,079, up 510 points on the week. Oils, unfortunately, were also higher. Brent crude closed at $85.28, that's up $6.71, and WTI crude closed at $79.86, up $6.09 on the week, almost reversing the previous week's fall. Not quite, but almost. The dollar index faltered and stands at 102.20. That's down 1.67 points on the week and may explain to some degree gold and silver's rise and also the rise, of course, of oil. Now, last week we stated there was a fair amount of market data being announced by the US, but Thursday was the day to watch. Why? Because of CPI figures being announced. So let's take a look at that data and what we have coming this following week. Okay, so looking at last week's data, we can see that on Monday, the New York Fed one-year inflation expectations came in at 5% for December, and the 5-year inflation expectations 2.4%. Still higher than what the Fed actually wants to achieve, but nevertheless, this is where their estimates lie. On Tuesday, we had the NFIB Small Business Index, which actually performed worse than expected, and wholesale inventories were exactly on par, both with expectations and what happened the previous month. Now the important data. What actually happened on Thursday? And we produced a video early in the week pointing out that Thursday was going to be the key date, and so it has appeared. The Consumer Price Index for December came in at minus 0.1%. Let me repeat that, minus 0.1%, down 0.1%. That was expected to some degree, but it now means we have had 6 months, if the government figures are to be believed, 6 months of continuing reduction in the CPI. Now, the core CPI nevertheless held firm and was higher than it was the previous month. So we need to be careful and cautious about that. The CPI year over year, therefore, for December is now at 6.5%, lower than 7.1%, and the core CPI year over year is 5.7%, lower than 6%. And this is what caused the rally on equity, crypto, and gold and silver markets on Friday. And then on Friday, we had the import price index, which came in at 0.4%, but a stronger than expected consumer sentiment index, albeit an early one. Now, this coming week, there's nothing scheduled on Monday because it's Martin Luther King Jr. Day. We have the Empire State Manufacturing Index for January on Tuesday. Now, important data on Wednesday, retail sales. And again, this is going to have an impact, only insofar that we don't have an FOMC decision until very early, at the beginning, in fact, of February. But nevertheless, the Fed will be basing its decision on the CPI figures announced already and retail sales figures. And we also have producer price index figures as well. Then on Thursday, jobless claims and continuing jobless claims. And then on Friday, we have existing home sales. So this data did in fact have some influence on both the dollar and gold and silver prices. We can see that the CPI figures, as predicted, dictated market movements, and markets became very bullish and positive. As mentioned, this was the 6th consecutive month that inflation, as measured by CPI, has diminished against a peak of 9.1%. What many miss, though, is that core CPI, where food and energy costs were removed, actually marginally increased on a year-over-year basis by 0.3%, which gives an annualized rate of 5.7%. If we see a continuing rise in fuel, then even the basic CPI figures could rise again next month. What traders have to judge moving forward is whether they believe the Fed will continue with its hawkish stance or whether it believes the Fed is bluffing. At the moment, they're not expecting a severe drubbing by the Fed, though we're not totally convinced that the inflation issue has been solved. So where does this leave us in terms of gold and silver? Well, we've said all along that the start of the new year will be bullish, and the fall in the US dollar, as well as good CPI figures, helped propel both gold and silver forward, though gold was the major beneficiary out of the two. Looking at how markets close on Friday, we may still see some positive follow-through for both precious metals early next week, and we could indeed see gold potentially aim for 1950, with 2000 being a slightly longer target range. We cannot rule out a correction, though, after initial euphoria, as traders try and second-guess the Fed's FOMC decision, which is due on the 1st of February. But we still have 2 weeks until then, or a little over. Some may indeed view any correction as a potential buying opportunity for both gold and silver. Silver, like gold, performed strongly on Friday and will follow its path certainly for the rest of the week. We are, however, very aware that silver needs to hold above $24 if it's going to generate enough confidence to propel it forward to and beyond $25. Whilst concerns about a recession continue, then silver will underperform gold. But once that fear is overcome and it's clear a recession either will not happen or has happened and is over, then it will really move and propel on its own. So with this in mind, we predict that gold's trading range for this coming week will fall between $1,875 and $1,975, though we're expecting it really to stay within the 1900 range, with $1,850 to $1,995 as outliers. We don't quite see it touching 2000 this week, but a lot depends on what's announced. We envisage silver will trade between $23.50 and $25.15, with $23.25 and $25.50 as outliers. Now, tomorrow we shall republish this video under a different headline and thumbnail, and on Monday we shall produce our forecast for 2023. Now, finally, if you are considering thinking about purchasing gold and silver, then do make contact with the Pure Gold Company, link below, who are only too happy not only to discuss short-term purchases and sales, but also longer-term strategies and potential retirement considerations. They'll also offer you a discount or special terms if you state you were referred by Illuminati Silver, and we too will receive a small consideration. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And as always, we wish you a safe, enjoyable weekend, and please note our video on Monday. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.